Friends, this is Harsha Buddala. We all know that on 1st February 2023, the Honorable Finance Minister Srimati Nirmala Sitharamanji has presented the Union Budget for the financial year 23-24. So I just want to give a very quick and a brief view about the budget 23-24. So I am referring budget at a glance document issued by the Ministry of Finance only. Okay, it is this PDF, this 5-page PDF is a part of the budget. Okay, just to give a very quick view to the users or to the citizens. Okay, uh, quickly this is a 5-page document, and in that also you can get a very quick, you can get a very brief view about the budget. You can get a very brief view about the entire budget by just looking at these 5 pages, and especially this page is very important. This page is very important. So I will try to explain you the all the things which is present in this. Okay, so without no loss of time, we will start this session. So if you observe here, 21-22 is there, 21-22 actuals is there, 22-23 budget estimates is there, 22-23 revised estimates is there, and 23-24 budget estimates is there. We said that this is a budget for 23-24. Then why 22-23 and that to 22-23 budget estimates, revised estimates, and 21-22 actuals are given? So usually 22-23 and 21-22 has been given for comparison purpose. Now what is the change when you compare with the last year? Now to know that, say for example, if you observe the tax revenue, now the tax revenue, it was 18 lakh crore in 21-22, and we are expecting 23 lakh crores in the year 23-24. Now to give a very good comparison for the users of the budget, users means we the citizens and other stakeholders will be the users of the budget. Okay, but if you observe here, 21-22 they have given actuals, and 22-23 budget estimates they have given, and also revised estimates. See, actually by the time they have presented the budget, financial year 22-23 has not been completed. 22-23 will be completed only on 31st March 2023. Budget was presented on 1st February 23. So 2 days, 3 days back, when the finance minister has presented the budget, financial year 22-23 itself has not completed. And 23-24, anyway, we all know that budget is an estimation of revenue and estimation of expenditure. So for 22-23, this is the reason why we will be having budget estimate and also revised estimate. See, budget estimate means we don't know nothing. So on 1st February 2023, we don't know any actuals about the financial year 23-24. But for the financial year 22-23, we know some actuals and we are having some estimates. I hope you understood. So on 1st February 2023, already already nearly 10 months has been completed. 10 months of financial year 22-23 has been completed. The only pending is some 2 to 3 months. So it is a blend of, revised estimate is a blend of actuals and budget estimates. Okay, but 21-22 we are having actual figures. Why? Because audit also will be completed. Okay, C&AG audit also will be completed. So 21-22 is an actual figures. 22-23, why budget estimates and why revised estimate what came now? This is the reason. Budget estimate means last year when finance minister has presented the budget estimates are the figures. Whenever the finance minister present the budget, those figures are called as budget estimates. If you observe here for 23-24, we can see budget estimates. But for 22-23, you can see budget estimate and also revised estimate. Why? Because on 1st February 2023, 22-23 itself has not been completed. Now then how can finance minister present the actual figures? But they can alter their budget estimates. Why? Because some actual figures they would have get by the time they prepare the budget. Okay, so this is the difference between actuals, budget estimates, and revised estimates. So our focus will be on 23-24 figures. Okay, so 23-24 figures, if you observe na budget estimates, and if you observe the figures here na, revenue receipts are there. Okay, and So each and everything I will come. First we will start with the total expenditure. Now what is the total expenditure for 23-24? It is around 45 lakh crores. 45 lakh crores. 45 lakh crores is the total expenditure. Total expenditure for the financial year 23-24. Okay, very good. See, usually expenditure can be broadly classified into two categories: revenue expenditure and capital expenditure. Now, what is the difference between revenue expenditure and capital expenditure? See, both are expenditures only, but the difference between revenue expenditure and capital expenditure was in capital expenditure. See, after incurring the expenditure, if any asset is generated, that will be called as capital expenditure. After incurring any expenditure, if no asset is generated, we can call it as a revenue expenditure. Simply speaking, you are having a 1 lakh rupees of money with you. With that 1 lakh, if you purchase a gold, then it is called as a capital expenditure. With that 1 lakh, no, all household requirements, okay, you with that 1 lakh you have spent without earning no other money for 6 months, for your food, for your maintenance, electricity, okay, clothing, everything you have spent it from that 1 lakh. Now 1 lakh spending for your regular maintenance and day-to-day expenses will be a revenue expenditure. With that 1 lakh, purchasing a gold is a capital expenditure. In capital expenditure, after incurring the amount, you will be end up getting an asset. In revenue expenditure, you will end up getting nothing. Okay, so that is the basic difference between revenue expenditure and capital expenditure. Like us, government also will have capital expenditure and also revenue expenditure. So total expenditure is 45 lakhs. In this, what is the capital expenditure on capital account? How much government had decided to spend? 10 lakh crores, 10 lakh 961 crores. So out of 45 lakh crores, government had decided to spend 10 lakh crores, which is a historic figure. So recently, from after COVID, especially after COVID, government of India is giving more and more importance to capital expenditure, which is a very, very positive sign. Okay, now whenever capital expenditure is being incurred, so usually for government assets means roads, bridges, okay, increasing the connectivity. Now whenever it is nothing but increasing the infrastructure facilities. Whenever infrastructure is being increased, it will increase the revenue. Now when infrastructure is increased, people will go here and there, businesses will increase. Whenever business is increasing, employment will increase. Now all of them will put together, generate more GDP. So it is a very positive sign to the economy, having a more capital expenditure. And if you look at the revenue expenditure, out of this 45 lakh, 10 lakh, this 10 lakh 961 is there now. This 10 lakh 961 is on account, on capital account, means nothing but capital expenditure. And if you observe on revenue account, how much? 35 lakh is the revenue expenditure. 35 lakh 2136 is the revenue expenditure. This is a broad breakup for expenditure for the government of India. Now on that revenue account also, on revenue account of which interest payments is, how much is the interest payments? 10,79,971 is what government of India is expecting. No, our interest payments will be. No, it is not an actual figure. Okay, actual figure may vary, which will come to know next year or after that next year. But they are expecting that we might be spending nearly 10,79,971 for interest payments and grants in aid for creation of capital asset. See, what is this grants in aid for creation of capital asset? I will explain in very few minutes, but please hold on. So simply speaking, up to here what we have observed was 45 lakh 3,997 is the total expenditure. In the total expenditure, 10 lakhs is capital expenditure and 35 lakhs is capital revenue expenditure. Now if you compare with the past years, in 21-22 it is only 5 lakh crores. Now if you compare with 21-22, almost the amount has been doubled. Now whenever capital expenditure is increasing, it is a very positive sign. So what is the observation? What is our observation till here? Capital expenditure is increasing, it is a positive sign. Okay, and if you come to the next one, now if you observe here, effective capital expenditure, I will come to it later. uh, revenue deficit. Very important word. We used to hear that revenue deficit. So that state is having revenue deficit and this state is having revenue deficit. So what is meant by revenue deficit? See, revenue deficit is nothing but total revenue expenditure minus total revenue receipt. Total revenue expenditure minus total revenue receipts. Say for example, uh, your monthly revenue was 50,000 and your monthly maintenance expenditure, I am not talking about capital expenditure, your monthly maintenance expenditure was 60,000. Your revenue is 50,000 and your monthly revenue expenditure was 60,000. What is the deficit? 10,000 is your revenue deficit. Okay, means your revenue 10,000, your revenue is short by 10,000 to meet your revenue expenditure. Same in the case of government also. So what is the revenue deficit government is expected to get in the financial year 23-24? It is around 8,69,855. No, 8 lakh crore. Simply speaking, 8,70,000 crore is the revenue deficit which government of India is expecting in the financial year 23-24. Excuse me. So huge, it is huge. No, amount may see as a huge, but if you compare with 21-22, what is the amount? 10 lakh 31. That 10 lakh they have planned to decrease it to 9 lakh 90,000. But what happened? No, they immediately revised. No, after a few months getting completed in 22-23, government had decided that no 9 lakh 90,000 revenue deficit is not possible. We are revising our revenue deficit to 11 lakh crores. Okay, so but for 23-24 they have planned it to reduce it to 8,69,855 crores. If government of India really achieve this, then it is a very good positive indicator, and the amount given in the bracket is nothing but the percentage of GDP. Okay, so this 8,69,855 is nothing but 2.9% of the GDP. Your revenue deficit is 2.9% of your GDP. Here it is 4.1, means your this 11 lakh 10,546 lakh crore revenue deficit is nothing but 4.1% of the GDP. Okay, the amounts given in the bracket is nothing but percentage of GDP. Okay, so now, so I hope you all got what is the difference, what is meant by revenue deficit. Revenue deficit is nothing but revenue expenditure minus revenue receipt. If you observe revenue receipt, they have given a formula 10 minus 1. What is meant by 10? Total revenue expenditure on revenue account. On revenue account, how much? 35 lakh crores. And what is 1? Total revenue receipt. So revenue expenditure minus revenue receipt, what is the amount is there? No? That will be nothing but revenue deficit. Now what is meant by effective revenue deficit? If you observe there, they have given effective revenue deficit also, 16th point. Now what is the difference between revenue deficit and effective revenue deficit? So now here we will discuss this 12th point, grants in aid for creation of capital asset. See, this grants in aid for creation of capital asset is usually part of revenue expenditure. So on revenue account 35 lakh crores they have said, of which interest payment is 10 lakhs and grants in aid for creation was 3,69,000. Now what is meant by this grants in aid for creation of an asset? See, usually government of India will give different kinds of grants to states and local self governments. So take for example, I can give you one example called Manrega, Mahatma Gandhi National Rural Employment Guarantee Scheme. In Telugu we will call it as Mahatma Gandhi Jatiya Upadhi Hami Padakam. So government of India had given some grant to a state under Manrega. See, whenever usually grants given, they will consider it as a revenue expenditure. Okay, but Manrega grants they can spend it for, see, in this employment guarantee scheme also, this amount will be spent in some cases for building up a capital expenditure, building up a capital asset. Say for example, in some villages you can see a CC road. nearly in on that CC road starting they will put a board that this road has been constructed by Manrega funds. Now Manrega funds, with the Manrega funds only they have created a capital asset. Sorry, they have created an asset. Now how can you call this as a revenue expenditure? The expenditure is resulting to this expenditure, the result of the expenditure is generation of an asset. Then how can you call this as an revenue expenditure? It is purely a capital expenditure. One second. So grants in aid for creation of capital asset is resulting in a generation of an asset. So it will be a capital expenditure. So as it is a capital expenditure, we have to exclude it from revenue expenditure. Now if you observe the formula for effective revenue deficit, 15 minus 12. What is 15 revenue deficit? What is the revenue deficit we have got here? 8,69,855 is the revenue deficit. Revenue deficit minus 1. Sorry. Revenue deficit minus 12. What is this 12? Grants in aid for creation of an asset. Say, to make it more simple, let us assume your revenue expenditure is 100 and your total revenue receipt is 80. Now what will be your revenue deficit? 20 will be your revenue deficit. But in that 100 revenue expenditure, 10 rupees is grants in aid for creation of an asset. Now you got a revenue deficit of 20, but what will be your effective revenue deficit? From that 100, 10 we have to subtract. Why? 10 is a grant for creation of an asset. So 100 minus 10, 90. 90 minus 80, 10. 10 will be your effective revenue deficit. Okay, so simple logic. No grants, you are considering it as a revenue expenditure, but that grant I am using it to create a asset. How can it be called as a revenue expenditure? It should be a capital expenditure. So effective revenue deficit, that is the difference between revenue deficit and effective revenue deficit. Deficit. Hope you understood it. Okay. And next one is fiscal deficit. See, before going to fiscal deficit, I will cover the revenue aspects also, so that you can get a better understanding about revenue receipts and all. Sorry, fiscal deficit and all. Revenue receipts, tax revenue and non-tax revenue. Tax revenue net to center. See, tax revenue means there are many taxes like income tax is there, okay, GST is there, excise duty is there, customs is there, okay. All these are the taxes which government used to levy. So from these taxes government will generate revenue, that is nothing but called as tax revenue. And the tax revenue they have said in bracket net to center. See, net to center means, usually take for example income tax. Income tax will be levied by government of India, but from the in that tax, nearly 41% of that, say for example 100 rupees they have collected as income tax. In that 41 rupees they have to distribute to the states. This is called as a devolution. So then 59 rupees only will be left to the center. So tax revenue net to center, how much they are expecting? 23 lakhs they are expecting. And non-tax revenue, what will be non-tax revenue to the government? Say for example, government have given loan to some other country, or government have given loan to a state. Whenever you gave a loan, you will get some interest now. That interest is a revenue to you. Okay, it is a non-tax revenue. Similarly, public sector undertakings will be there. In that public sector undertaking, government of India will be having holdings. Now, whenever you are holding shares in a company, you will get the share in the profit. That is nothing but dividend. So dividend which government of India is getting, I can call it as a non-tax revenue. So these are the examples of non-tax revenue. How much non-tax revenue they are expecting? 3 lakh 1,650. So the total put together, the total estimated revenue for 23-24 was 26 lakh 32,281. And what is your expenditure? 45 lakh crores. And what is your tax? What is your revenue receipts? It is 26 lakh 32,281. And next one, come to capital receipt. See, always capital receipt and revenue receipt, what is the basic difference was? Revenue receipt Every time it will come. No, every year Government of India will collect income tax from you, GST they will collect, customs duty they will collect, excise duty they will collect. No, it is part, okay, every year it will come. But the capital receipts, na, every year there is no any guarantee that definitely it will come. Say for example, recovery of loan. No, when you give a loan, then only you can recover. No, just like that, recovery of loan will not come every year. Okay, so recovery of loan or capital receipts, what can I say na? Capital receipts, whenever the word capital receipts or capital expenditure comes, asset will be involved. Say capital receipts la either creation of asset will be there or either deletion of the asset will be there. Whenever I am incurring a capital expenditure, creation of asset will be there. Whenever I use the word capital receipt, deletion of the asset will be there. Say for example, I gave a 1 lakh loan to one person. That 1 lakh loan which I gave, the 1 lakh loan which I gave 1 lakh loan, for me that 1 lakh will be an asset. So whenever the borrower had repaid the money, that 1 lakh asset for me is getting deleted. Now in that case, whatever the 1 lakh money I am receiving, that is a capital receipt. Similarly for government, whenever they gave the money, it is a asset to the government. Whenever they are receiving, whenever they are recovering the money, asset will delete, and the 1 lakh money which they are receiving is nothing but a capital receipt. So capital receipt, but that is the reason why they have taken a first case, recovery of loan. See, capital receipts can be of many types. In that, first one is recovery of loans they have taken, and other receipts, all other receipts. All other receipts means government had sold a property, government had sold some stake in a company. No, here killing of asset is there, deletion of asset is there. So it is not your revenue, it is not your revenue. You can't run the country by keep on selling the assets. Okay, so we can't call it as a revenue receipt, it is a capital receipt. Once a while it will happen. If you take a personal case also, if you are an employee, whatever the salary you are getting, that is your revenue receipt. Sometime due to some financial needs, you may sell some gold, you may sell a land. So these are whatever the money you are receiving by selling the land and by selling the gold is nothing but a capital receipt. Okay, so similarly for government also, revenue receipt is there, capital receipt also is there. And see, if you observe here, 26 lakh crore is your revenue receipts, and 23,000 you are estimating that you will get through 23,000 crores. 23,000 crores you are estimating that you will get through recovery of loans, and 61,000 crores you are estimating that as an other receipts. So 23 plus 3 lakh crores, 26 lakh crores. Okay, 26 lakh crores, 32 lakh 281. And what is the money you are getting through recovery of loan? 23,000 crores, and 61,000 crores you are getting an other receipt. So hardly put together you are getting roughly some 27 to 28 lakh crores as a receipts. Whether it is a capital or whether it is a revenue, your total receipts are being estimated to be 27 to 28 lakh crores. But what is your planned expenditure? 45 lakh crores. Now the difference, how you will get? You will get it through borrowing. So Government of India will borrow the money. Now what are the estimated borrowings? 17,86,816 crores. These are the estimated borrowings for the Government of India. Okay, so now come down. Now we'll go and read, but now we will try to understand physical deficit. So physical deficit, what is the equation they have given? 9 minus 1 plus 5 plus 6. What is 9 here? Total expenditure. What is the total expenditure? 45 lakh. 45 lakh minus 1 plus 5 plus 6. What is 1? Revenue receipt. So from total expenditure, we are reducing revenue receipts, and also we are reducing recovery of loans, and also we are reducing other receipts. So what you will get? See, from 45 lakh 3097, if you reduce this 26 lakh 32,281, and if you reduce this 23,000 and 61,000, you will be left out with 17 lakh 86,816. That amount only, exactly that amount only, government also will borrow na. Say for example, forget these borrowings for time being. Now what is your planned expenditure? 45 lakhs. And what is your revenue receipts? 26 lakh. And what are the other receipts? 2361. So from 45, if you reduce this 26 and this 23,000 and 61,000 crores, the balance amount anyway you have to borrow na. Now that balance amount only we will call it as physical deficit. If you go and see here, 17,86,816, it is nothing but your physical deficit. So your physical deficit, you are expecting that your physical deficit is going to be 5.9% of the GDP. 5.9% of the GDP. Actually, before COVID, the fiscal deficit of the government of India had done a very good job to reduce the fiscal deficit to nearly 3.5 to 3.4% of the GDP. Okay, but all of a sudden COVID had came, and because of that, revenue had fallen down, expenditure has increased, so it went up to 9% of GDP, and slowly now they are decreasing. They have decreased it to 6.7% of GDP, and they are planning it to decrease it to 5.9% of the GDP. Okay, if government of India really achieves this, then it is a very good indicator. And next one, primary deficit. What is meant by primary deficit? See, in physical deficit, what we have observed, total expenditure minus revenue receipts minus recovery of loan and what other receipts. Okay, but in the total expenditure, if you observe, what is there? Total expenditure of 45 lakhs is there. In that 45 lakhs, capital expenditure is there, revenue expenditure is there. In that revenue expenditure also, interest payment is there. How much? On account of interest payments, of which interest payments is how much? 10 lakh 79,971. So the difference between physical deficit and primary deficit is nothing but, in physical deficit, whenever you are calculating the physical deficit, in total expenditure you will consider interest payments, but whenever you are calculating the primary deficit, in total expenditure you won't consider interest payments. Say for example, in physical deficit you would have directly taken the figure 9 means 45 lakhs. 9 means total expenditure 45 lakhs. In that 10 lakhs interest is also there na. Okay, that you have, means interest portion you have considered, interest payment you have considered in physical deficit. But if you look at the primary deficit formula, 17 minus 11, 17 means nothing but physical deficit. From that physical deficit you are simply reducing the interest, so that gives you 7,06,845. Okay, so this is about primary deficit. See, primary deficit means yearly how much additional burden you are putting. Okay, interest and all, if you keep aside interest, how much is the actual deficit you are creating every year. Okay, so that will be set by primary deficit. Now before COVID, this primary deficit had came down to 1% of the GDP, nearly 1% of the GDP. All these things you can find it in economic survey report also. Okay, so after observing all these things, okay, especially the increase in capital expenditure was was a very good and a very positive sign. And if the government achieves this revenue deficit, and if they choose this fiscal deficit also, no, they have decreased these indicators. Okay, so overall it sounds to be a very good budget. Actually, even I have some personal disappointments regarding income tax provisions and all, but keeping aside that income tax provisions and all, it's a good budget overall. Okay, this is my personal opinion only. Okay, so this is how you have to understand the budget. No, we can't go and refer each and every page in the budget. Okay, budget is a 1,000-page document. Each and everything we can't read and understand, but we can have a overview by budget at a glance. Okay, so this is a budget at a glance, and two pie diagrams are there. Rupee comes from and rupees goes to. Now each and every rupee. Okay, so if you consider the total revenue as 100%, in that corporation tax, company tax, in that 100, 15 comes from corporate, and 15 comes from income tax, and 4 comes from customs, and 7 comes from excise duty, and 17 comes from GST, and non-tax receipts is 6, and non-debt capital receipts is 2. and 34% will comes from loans and borrowings only. So for every 100 rupee of our expenditure, okay, or whatever the amount we are about to spend, in that every 100 rupees, 34 we are depending on borrowings only. Okay, so these diagram you can simply go through and you can understand. Okay, so I hope this video is very much helpful to you. If you really like this, if you really feel that this video is helpful to you, please like, okay, and also share it with your friends, and share your views in the comment section. Thank you.